Mr. Ross, thanks for being with us today.
Good to be with you, Willow.
I know you just are fresh off your panel this morning, Wall Street, Main Street, and the Beltway. And one of the things that you raised as a real issue of concern is corporate America is very healthy right now, and companies have learned to operate with fewer jobs and lower costs. This may look great for their bottom line, but how is it helping us with our jobs crisis?
Well, it isn't. It's going to create structural long-term unemployment, and that's only going to be dealt with if the GDP grows at a very rapid rate. We probably need more than 3.5% GDP growth just to deal with that issue.
But that structural unemployment has to then feed back to the company's bottom line. If people are out of work, the consumer is not out there spending. So at what point are companies encouraged to take some of that cash that they may have on the sidelines and start investing in their labor force?
Well, they are investing the cash, but not necessarily in the United States. Something like 40% of the earnings of the Standard & Poor's 500 come from outside the U.S. And that's a problem that's going to continue because you have more rapid market growth outside and you have much lower wage costs. Plus, increasingly people are finding they need to go outside to find engineers because we're not graduating enough engineers, and of the ones who do graduate, many of them are foreign nationals and we won't give them visas. So we're deporting brain power and importing the products they create in other countries. It makes no sense.
And any sense of how we shift that balance and invest more in U.S.
It would be very easy. You could simply staple to any graduate engineering degree an H-1B visa.
Well, something called the Staple Act
is a very simple
and you would be in favor of that?
Absolutely. I think our hope as a manufacturing nation has to be based in technology. So we need more scientists because China and India graduate each year 7 times as many as we do. Our guys aren't going to be 7 times as effective as the ones in Asia.
And that's been a recurrent theme here.
Yes.
Before you got to your panel, you managed to get a deal done this morning. The rest of us were having our cup of coffee. You did a little business. Sold International Coal that you bought in 2005 to Arch Coal. Why are you getting out of that business?
Well, it was time to harvest the sale, and it makes very good logical sense for Arch to acquire ICG. Our management was very much in favor of it. There are lots of synergies between the two companies, and the market treats much better big coal companies than small cap. At $2.4 billion, which is what we sold it for, we're kind of a mid-cap company. The combined company of Arch and ICG will be quite a major player. And we think that's much better.
Quick question about another area that you're invested in, the banking business. You acquired Bank United.
Yes.
And when you took it public, you said that you were going to invest. You can use those funds to invest potentially in bank acquisitions. Any acquisitions on the horizon for you?
Well,
in terms of
we're looking at more banks, mostly overseas. But our bank in Michigan, Talmer Bank, on Friday took over another bank with FDIC assistance. That's the 4th transaction that group has done. So we're building up a very major Midwestern presence.
And then you said internationally.
Yes, we're especially looking in Ireland and in England.
Any news you might like to share about, are you looking for potential acquisitions there?
You'd be the first to know.
Well, we were hoping. All right.
You don't want to be an insider trading. There's enough of that going on.
As always, nice to have you with us.
Good to be with you.